What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is April 11th of 2022. Please go ahead and click the like button on this video and subscribe to my channel. It really helps spread the word of Pristine Capital. And thank you so much to all the new subscribers that are coming from Long Island Audit. Thank you so much. You guys are awesome. All right, today we're going to talk about the price action, the indices. We're going to talk about my trading for the day, which I did do a lot of today. And then we're going to talk about the CPI data point that is coming out tomorrow. Before we jump into all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades, any of your trades, etc. All right, let's dive into today's box scores. We had some broad-based weakness, team. And the NASDAQ pretty much completely washed out ahead of the CPI data. We had the S&P 500 finish down 1.71%. We had the NASDAQ down 2.37%. IWM small caps were actually our best performer on the day. They were only down 0.67%. Dow Jones was down 1.2%. And we had the ARC Innovation ETF, the Cathie Wood Special, down 1.34%. Now take a look at this. Pretty much everything closed at the very low end of the day's range, except for the ARC Innovation ETF. So we'll pull up the chart for that one shortly. Volatility really picked up across all of these indices. The VIX was up over 15%, and the breadth of the market was negative. We had pretty much a washout day into the CPI print, and my trend model flipped to a -3 as of the close on the session. So let's dive in here. Our inflation data, this is going to be crucial. So we had, again, washout in the market, volatility spiked. This really just seemed like there were a lot of players that bought into that March rally. They bought in at those lofty levels where we were saying, hey, there's likely going to be a pullback coming. Those players are pretty much now puking up all their exposure. And the main concern is, oh my gosh, inflation is too high. If inflation is too high, that pushes bond yields higher. And as those bond yields go higher, that really pressures the stock market. Now tomorrow we're going to get this inflation data. We're going to get the CPI. It's going to be out at 8:30 a.m. tomorrow. So watch out for this. The expectation is for a 6.6% year-over-year increase in the core inflation rate. And for the base inflation rate, the expectation is for 8.4%. So now heading into this event, look at what happened in the market. We had a complete bloodbath. Tesla was down almost 5%, everyone. Come on now. And it was announced that Elon Musk is not going to be joining the board of Twitter. Nvidia was down 5.2%. Apple down 2.5%. We had Microsoft down almost 4%. Google down 3%. So this mega cap tech space and the semiconductors, they got throttled today. And it's happening off of higher inflation expectations. So the question I would ask here is, what's going to happen if this inflation print comes out right on the estimate, right on the money? Well, everyone pretty much already capitulated out of those technology companies, out of the rate sensitive assets. What happens if it even comes in a little bit lighter than expected? I would imagine we could have a snapback rally in a lot of these assets that have sold off. And another thing that has me a little bit more optimistic is we are seeing crude oil prices head lower. Let's take a look at crude. So remember, earlier in the month, crude was getting out of control. It's been in an uptrend since January, since the beginning of the year. But this was the Russia and Ukraine conflict. It spiked all the way up to $130 a barrel. Now here we are, as we got into the latter part of March and into April, crude oil's down to $95 a barrel. Granted, that's still very high, but in terms of future inflation, it's better that we're down 30% off the highs than if we had kept ripping to the upside. So yeah, I think some of these inflationary pressures, we're going to start to see that they're beginning to come off a little bit. And that's very tough to believe, but really with this inflation data, once you hit the peak and you start coming off, even if prices stay at these elevated levels, for inflation to continue higher in terms of the data points, we would need everything to continue on its increase. If it just stays at the same elevated prices, then technically inflation is not increasing. All right, so that is crude. Let's jump over to our S&P 500 and take a look at the technical picture here. So look at this. We actually dipped below the 20-day moving average. Remember, we've been watching this level, this pink line, for the past couple days, and we were saying, hey, every time we test this level, there's a higher chance that we could end up breaking it to the downside. And it looks like we had 1, 2, 3 touches, and then on the 4th touch, we really just gave up the ghost here. So a huge day to the downside. We also closed below the 50-day moving average as well as below this monthly value area high. So yeah, the technical picture is definitely getting weaker. There's no ifs, ands, or buts about it. And because it is after 6 p.m., we can see where the futures open. They're pretty much unchanged. They're up, looks like 0.07% from the bell. Let's take a look. NASDAQ, huge bloodbath, also below this 50-day moving average. And you can see we have this monthly point of control down below here. So still a ways to go for that monthly point of control. And the NASDAQ definitely looking the weakest out of all of these indices at the moment. Now the small caps, these were, I guess, a spot of relative strength, but you can see the small caps, they're also below all of these key moving averages, and we even closed below this monthly value area low here. So all of these indices are definitely under technical pressure. Now we're going to get the big reveal of the inflation data, and we'll have to see how these respond. You can see the Dow Jones also dipping inside of this monthly value area. And let's jump over to our rotations and our sector map. So this sector map, every day it's ranked in terms of momentum. And you can see the top areas for momentum are consumer staples, healthcare, and utilities. These all actually sold off today. The only bright spots, we had home builders, which were up 0.5%. And we had some regional banks up about 1/3%. Transports also barely even managing to bounce. But you can see cannabis names were down almost 3%. We had biotech down 3.34%. So all these risk-on areas of the market really just getting licked. Style factors. We had defensive selling off by about 1%. And you can see the momentum and growth sectors or style factors. Those were the most highly impacted by this move in rates, because this move in rates is really what is driving everything. Take a look at these 10-year Treasury futures. This is the big story. So if you're looking for like, when is the market going to get a little bit stronger? Look at these Treasury futures, because these are going to provide the roadmap. So what you'll notice is we've had 1, 2, 3, 4, 5 down days in a row into the inflation print. So in my opinion, today was a great day to actually pick up some of these rate sensitive assets, because I do believe this could end up being like a sell the rumor, buy the news situation. There are players out there that they are hedging their portfolios because they're worried about the CPI data as well as the PPI data coming out the following day. So if that data point comes out, it's a little bit light, all those hedges are going to have to fly off, and I do think the market could end up moving a bit higher. Also, this shortened holiday week, there's going to be lower volume, and who doesn't want the market a little bit higher into Easter? So let's take a look. We have the 10-year Treasury futures. We have the 30-year Treasury futures. These also ended up getting absolutely smoked today. Now let's take a look. There were some bright spots in the market, and I did actually do some trading today. So like I said, I did get long some of those duration sensitive assets. Let's take a look here, and we'll go through some of my trades for the session. So let's go over to the stock trading first. So I got long some NetEase common shares for 97.57. NetEase looked like it could have some promise today. It actually gapped higher, even though the overall market gapped a little bit lower. I ended up taking my stop on day one though. I basically got long above this 200-day moving average, and I decided, hey, we got a very weak close. I'm just gonna take the stop on day one and really just keep it moving here. Hey, if this thing starts to move to the upside, that is great. But yeah, we just got a sell-off on high volume here. The other setup that I did take in terms of stock trading is GoGo. And this one ended up defying all of the market weakness today. This name was an absolute trooper. Yeah, this was one of the names from our weekend watch list that we send out to all Pristine Capital members. And we basically take a look into the markets. I do a lot of scanning, and I look for stocks that are really doing something a little bit different, stocks that are trending higher. This weekend, it was pretty tough for me to find setups. Our watch list only had 3 names. And this setup, as we had outlined, this trigger point was $20.02. So I did end up entering GoGo as it approached that trigger. And you can see here, GoGo, my target for this trade, is up at this 22.24 level. That's basically just a trip back to the prior highs that I made a few days ago. But this is definitely pretty promising. The other thing that I'm doing here is, because GoGo ended up having a pretty strong finish through that trigger, I'm actually going to move my stop up to break even. So what that does is now I have no risk in this trade, and I can go ahead and finance another trade knowing that, hey, if this one reverses, I'm going to stop out at break even. But yeah, GoGo looking very solid. And then what else did we trade today? So we had GoGo. Shopify, they announced a 10-to-1 stock split. So again, just because I know, hey, there's a good chance we had some capitulation today, and what if these rate sensitive assets get a bounce, I figured, hey, let's give Shopify a try. This one, they just announced their stock split. That means there might be a new crop of retail buyers that can finally access this name and end up finishing positive and put in a doji candle right as we're approaching this monthly value area low. So we're right by a support area. See, I took that long via common shares. What else did we do today? I did some options trading as well. I sold some Upstart puts expiring on April 14th. So that is only, I believe that's Thursday. Yeah, so I'm holding on to these things for just 3 more days. I got to sell these for 95 cents, and I sold the 80 strike puts. And I said implied volatility is rich in this stock. This makes money so long as Upstart is trading greater than $79.05 on Friday. That should actually be Thursday. And I said I'll take delivery of these shares if it gets there. So Upstart, this is a fantastic stock, really just for trading. This one's an amazing trading vehicle. And you can see Upstart, it's pulling back to the same levels where it's bounced ever since it made its low in January. So you could be very aggressive and be like, I'm buying calls here. But I figured, hey, these premiums are so rich. Look at this stock. The IV percentile, which I have marked down here, is 93.7%. So the implied vol, these options are bloated. They're super expensive. I was like, let me go ahead and sell those options. So assuming that Upstart doesn't drop, I think it's like 14% by Thursday, I'll just take in that premium, collect it, and yeah, make a couple bucks off that. So that one looking really good. And then the other thing, if I do take delivery of the stock, the call options are also so expensive. So I could take delivery of this stock for, let's say, 80 bucks, or it would actually be like 79.05. Then I could go ahead and sell a slightly out of the money call for May, and I could probably collect about like $10 worth of premium for that. So this is a name where you can really knock your cost basis down pretty quickly. I day traded some SPY calls. I entered those for 486. I exited for 535. It's a nice little winner. Made some lunch money there. And then I took those calls back at around lunchtime. And this is like a short-term trade again, just in case the market ends up bouncing tomorrow. So yeah, a lot of activity for me today. We're going to have to see what happens tomorrow. This is going to be a crazy day tomorrow, team. It all kicks off at 8:30 when that CPI data print comes out. Hope you guys all had an awesome trading session, and I'll see you all tomorrow.